Hey, gang. We're all back again after a few minutes break. So thanks so much for joining us for Streamlining month-end process for not-for-profits. So we've got Chloe and Tyler. So Chloe is our head of finance at Wheel, and Tyler is partner at Bean Counters. I think you guys, if you were on the session before. I'm gonna stop rambling because it's over to these guys. But as I said in the prior session, use the Q&A, use the chat as much as you want, get as much juice out of these sessions. I'm going to kick off a poll just to get a flavor of how long the current month-end process takes you. And then I'm going to fade off into the background. So over to you guys.
Thank you. I love the poll. Like it is always kind of scary when month end can take the whole next month. As I've seen plenty of businesses or finance teams spend their whole month end kind of looking backwards rather than kind of helping the business, which is really hard to do.
Pretty much, it's almost like you've just finished the month end. It's like, okay, 3 days later, all right, start the next one.
Yeah, indeed. Chloe, why don't you introduce yourself and a bit of your background, then I'll do a bit of mine, and then we'll move into, we've got a couple of slides for the people as well.
Cool. So hi, everyone. My name's Chloe. I'm currently the financial controller at Wheel. I started my career in audit at EY. So spent a couple of years there in the Sydney and the San Francisco office. And then I moved on to Vodafone/TPG, working across, financial control and also finance business partnering. So I've done a lot of month ends in my time. So yeah, happy to have a chat with everyone today.
Nice. And hi everyone, I'm Tyler Caskey from the Bean Counters here in Sydney. We're a team of 7 that help businesses install new systems or automate the systems they've got. Very similar to Chloe, I started my time in the Big Four at KPMG and Deloitte. Did about 12 years as a financial controller, a business partner, or a CFO, and then made my way back into partnership in 2020, which was an absolute blessing because now instead of helping one business, we can help multiple. Adriana, I'm seeing some fantastic screenshots on your homepage. There we go. Yeah. I don't mind looking at what you've got saved on your homepage. It's great.
That could have been terrible. I mean, I just am really bad with my desktop, but right. Don't worry.
Excellent.
I'll keep it on this. But when do you want me to switch slides? Now,
let's do it now.
Yeah, here we go. So, I like that you followed that. Don't have too much text on the screen. You really nailed that.
Yeah. This one is we've tried to do today. I suppose we're talking about how to close month end quickly, and my experience from this has always been around trying to close month end in one day. I've presented a couple of times, or been lucky enough to present with the Wheel team on how to close any books, multi-million dollar, over $100 million books in one day. And it came out of a topic from a guy named Stephen Bragg, 20, 30 years ago, called The Fast Close. There's a podcast, there's a book, all these types of things. If I'm being honest, it's a little dry, but there's some fantastic tools in there. So, what we're going to really try to talk about today is about how a not-for-profit can speed up their month-end close as well. Chloe, how do you run your month-end in Wheel? Like, what type of timeframes you're working to? What type of reports you're working to?
I mean, we try to do a very quick close as well because, traditionally, when you think about a lot of the time that's spent on the month-end close is like reconciling expenses, the nitty-gritty, the things. And with that, because we use Wheel, that's really quick because that's kind of like real time.
Mm-hmm.
And then I guess we just spend like a day or two in terms of looking at the other things that like your accruals, your standard accruals and stuff that has to be done. That's what we focus on, the things that, and the more material items. I think on this slide, there's something here that's like, you don't need to get it like 100% correct in the sense that, if it's $50 off, is that going to make or break your financials, your P&L? Not really. That's just surrounding, right? So we really focus on the big item, the big important items, and that's how we kind of run it.
Yeah, absolutely. Like we often, our business does a little bit of outsourced CFO, but predominantly it's project work about helping finance teams close month end faster or do their reporting faster. And Chloe, that's one of the first things we always teach. You know, and it's a definition of, like, in my head, between a financial controller and a CFO is materiality. You know, like being able to look at what a board or a leadership team or management team is going to be materially worried about. And so many businesses I come into, the accruals are like, there's 5-6 pages of accrual documentation every single month that are being reversed and redone that just don't add enough material value to the decisions of the business. So it's very cool.
Yeah. And someone just wrote that they suggest looking at expenses and revenue before month end. And I think that is such a case where we look at our key metrics like MRR, expenses, like weekly. So really, then by the time, and those are the, like you said, the metrics that the execs and everyone actually cares about. And because we already know that come month end, it makes things a lot quicker.
Yeah, that's a huge play. And systems such as Wheel and Xero, Employment Hero, and your CRMs like Pipedrive, they can make the review a lot easier. I remember when I moved the business from Great Plains into Xero and gave our CEO read-only access so he could see everything in the system. He would actually be reviewing his entertainment expenses because it was the design business, and design is very bougie. Everyone's buying, you know, expensive lunches and dinners. And he would be reviewing those entertainment expenses of his account directors pretty much once a week. And so, like, having systems that are easy for people to review, that aren't super complex, like, you know, most people can open Xero, QuickBooks, or MyOb and, you know, hit the drop-down box and run a P&L and click through to have a look. So, you know, if you're on a system that isn't naturally intuitive, sometimes you might actually be making your review harder as well.
Absolutely. And I think, like, I guess for some context, like before when I was in an ASX company, which has been around for a long time, we were using Oracle, but it was like an Oracle version, probably like that hasn't been updated for like 10, 15 years. So everything was clunky. It wasn't easy to use. It took a while to get a drill down. And then it just makes the review process so much harder. Whereas if you get the relevant updates and use the technology that's there, that's meant to be making your life easier, it just makes everything, like, it's just the thought of change is hard, but once you do it, it just makes your life so much easier afterwards.
Yeah, agreed. So we've only got 2 slides that Chloe and I are talking through today. And, you know, the play here is about things that apply to almost every organization, every business. And then the next slide we're talking about is, you know, really, you know, nailing it for a not-for-profit. Our business at the Bean Counters, we've worked with, like, recently over the last 3 years, about 10 not-for-profits from small to like really, really large, that have had incredibly hard month ends and have just stepped them through over the last, you know, over about a 6 to 12 month period, just making their systems better, making their processes better, and making their, as Chloe said before, making their materiality a little bit better. And that's what we're kind of going through on this slide today. And it's this slide can sometimes be put into 10 different slides, but it's really about, like, automation, eradication, and delegation of each of the processes. And so I'm going to kind of start on the basics on the top left-hand side. And Chloe, chime in, you know, anywhere where it's kind of, you know, add some value there. But one of the key things I've always seen, and especially in diverse organizations, is centralizing the accounting team. So if you're in a not-for-profit and you've got accounting teams, you know, all around the country, sometimes for absolute efficiency, it can be better to have it in a single location on cloud-based software, if possible. I know that can be very, very complex if you've, you know, purchased businesses or organizations, or, you know, it's it's not the right thing to let go of someone just because you want to centralize, your business, right? There's no performance issues there. But that is, I've found, one of the number one things people need to do to improve like the turnaround of their finance functions, because you can get buy-in. And the second part there for me is about do it once, do it right. Now, I guarantee everyone on this call, we've got 96 people on the call right now. I would love to hear how many fixes, if you're in a finance team, how many fixes you have to do per month on transactions that were incorrectly coded. Now, when I come into a business, I'm usually looking about 20% of the transactions are coded incorrectly. Like a light meal is put to entertainment. A motor vehicle expense is put somewhere poorly. Wendy, you've said way too many.
Yeah.
Chloe, how do you find that? Because you're obviously on a pretty good tech stack at the moment.
I think I've got to admit, when I first started, I had to do a lot of it because I think it can't, even with your tech, with a good tech stack, the data is only as good as the input, right? So it involved a bit of training internally, so people know what is entertainment, what is this, what is that. And once I got the team's buy-in and got them to know how they should actually categorize things, I found that I had to do it less and less as time went on.
Yeah.
Because then sorry, go on.
Yeah, no, you're right. Like the technology can kind of drive it as well. One of the things, and I know this isn't like a wheel selling session, but one of the things I love about Wheel is I can restrict what codes certain people can use. So, we've got in our business, we've got certain people that travel and certain people that don't travel. So they do or don't have access to the travel codes. And I saw something from Mark about the find and recode as well. The thing we've set up in our Wheel, like we use Wheel for our business as well. Our approvals, I look at every single coding before it goes into Xero. So I know for a high volume business, that's probably not the most efficient process. But if you've only got, a handful of Wheel transactions a day, making sure those are right is a big win.
Yeah, and it's also not just from, you can limit the coding in terms of budget and also vendors. And I found that really helped because, like I said, it's personal, but it's also the technology helps drive that behavior. So
you're restricting certain vendors to be in certain codes. So you've got consistency. How do you do that?
You can do it I can show you how you can do it in Wheel. You can do it by merchant as well.
Oh, nice. Is that for bills or is that for expenses and debit cards as well?
Everything.
Oh, cool. I'm turning that on for sure. This is my learning. The third point we've got there under the basics is start prior to month end, which everyone does, but I go way more in depth than most people. And this has been my magic sauce. I remember I was about 27 and I was financial controller of a $50 million law firm. And month end was day 6. And I was like, I just don't want to spend 6 days looking backwards. I'd rather spend 1. And we got that down to 12 or like midday, noon on day 1 was our month end reporting. Books closed, done. All the accruals, all those types of things, tax journals, overhead allocations, everything. And the key was just starting the day before month end or a week before month end. If you've got a fortnightly wage thing, as soon as you do your wage payment, do your wage accrual that day, right? If you've got electricity and it doesn't come until the 10th, just have a best guess and do it on the 28th of the month. Or even better, do standing journals to kind of keep those things coming up. And then review all those expenses over and over again. Like a lot of people will open their P&L and balance sheet for month-end reporting on day 2. That's, in my opinion, that's 7 days too late. That's actually probably 20 days too late. A good financial controller and director or CFO will be looking at their P&L and balance sheet for errors and fixing them the whole time. And Chloe, I'll throw that to you. How often, you got 22 working days a month, how many times would you look at your P&L throughout the month not relating to month end?
Often, I must say. For example, like Adriana and I go through marketing P&L probably a week before month end every month.
Excellent. And the next one there is about deliver financial statements. So what delays month end? And this is especially important in not-for-profits is not-for-profit reporting is huge around incidents. It's a big around, what impact we've had to the community. And these things don't have to be bunched into month-end reporting. Yes, it's important, but like one of the best things I've been able to find for finance team's efficiency is splitting your P&L and balance sheet, AP, AR, whatever reporting you've kind of got that is basics to your finance system. Deliver those, close your books, lock it, return your BAS, do all those things on day one. We used to return and pay BAS on day one because we were in a cashed up business. If you just deliver those and then day 2, 3, 4, 5, you can deliver any type of non-financial or financial things that's not P&L and balance sheet. That's where I've really been able to turn that around. Chloe, what are you doing? Wheel, what's your how deep is your month-end pack?
It's actually quite light, to be honest. Like I said, we report on what's important, what everyone cares about. So like 2-3 pages.
Yeah, that's really good. And I'm just seeing a note there from Patrick Foon in the comments. Patrick, you've had the similar experience to me about external bookkeepers. Now, I don't want to criticize external bookkeepers, but there are very good ones with high attention to detail and the right level of criticism that ask the right questions. And I've also found there are very poor performing bookkeepers, be it internal or external. And for me, that is a big cost to the finance team. So if you've got a bookkeeper that is constantly making mistakes and not doing it correctly, I recommend changing bookkeepers, or even better, trying to change them, giving them 2-3 months to improve their process, and then moving on to like a better, moving on to a better way of doing finance. Patrick, good job, already changed. Well done. A good bookkeeper is worth their weight in gold. I cannot express that enough. A bookkeeper that asks the right questions. So we'll move on to expenses there. Like, Chloe, how do you cut your expenses off? How hard do you cut your month-end expenses, and when?
So with us, because I think everyone's quite on board with clear, because of the company that we run, everyone's very clear in terms of expenses and how important it is to have everything in. So pretty much, if anything from day one, if you haven't put it in, if someone has missed it, they will come and tell me.
Oh, wow.
Yeah.
Wow.
Thank you, Adriana.
I've got a theory on expenses, and it's worked. That was a good face. I've got a theory on expense cutoffs, and it's worked for me for the best part of, I learned it when I was 28, and I just don't cut off. I just let the months roll. And here's my theory. In a board meeting, I always would rather explain a variance than have perfection. And I worked in AGL, like a big listed company, and we were accruing everything. Everything that didn't come in, we were accruing and reversing because we were trying to get as close to budget as we could. Because you're listed, you get really drilled on variances against budgets and last year. And what I've done for other businesses, unless it's incredibly material, and I'm talking, if you're a $50 million business, you've got to give me a $40,000 accrual to put into the business. Because if you're a $50 million business, you're probably making between $5 and $10 million profit. So you're probably making $500,000 to $1 million in profit per month. So I just do not care about a $10,000 accrual. I do not care about, and Patrick, you're saying the same thing. And Kelly, you're saying, I wish. Now, I know, now my nudge is, here's how I did it. I stopped accruing one thing per month, right? So I didn't accrue a phone. And then the next month, I let the phone bill just catch itself up, because you let cash do the magic, right? When you pay it, that's when it happens. And then all I started to do was drop one accrual off and let cash happen. And it's a little sneaky, but if you do it over a 12-month period, someone will pick up something and you go, yep, I've decided not to do that because it's a waste of time. Now that one happens. And Nikki, Douglas, you've said, except for end of year. Absolutely. End of year is the only time you have to be perfect. And I think that comes to standing and recurring journals. if you've got a journal or recurring journal that needs to happen every month, we've got plenty. Like in our books, we do a salary sacrifice out of wages standing journal, because Xero does not know how to handle salary sacrifice properly, but that's okay. Those things are really important. And Chloe, from your experience, could you give me an example of I'm looking at that third point there, of suppliers that have given you poorly dated bills or late bills or too early?
Oh, all the time. Like, I've seen invoices that come like, say, 6 months later, and it's like, oh, it was from 6 months ago. And I think it comes down to the materiality piece, right? I didn't say
Adriana, was that
anything,
you?
Adriana.
It's totally a marketing cost.
Like, at the end of the day, you know, a $500 bill that's 6 months late, is it going to kill me if it went into June or December? Probably not.
Yeah, I agree. The other one I often do is rent. So if someone sends me a rent bill and they want it paid on the 15th, I just say, hey, can I pay you from the 15th to the end of the month? And then you send me the next bill on the 1st in advance. So again, coming back to like letting cash be the driver of month end, rather than all these doing accruals. And I always think every single journal I do in month end is a waste of my time. The minimum I've ever been able to get down to is an overhead allocation journal and a tax journal. So that's like, they're the two I've never been able to get away with. And if anyone actually has not been able to do those two, I'd love to hear. And I think the last one there on expenses is about percentages, right? So in board meetings, I've always talked to boards all the time about percentages, and the best board members, they will always pick up, all wages feel a bit high, all expenses are a bit high, oh, my gross profit's a little bit low, right? So the thing I always look at early is, what are my percentages kind of looking like? Can get really hard in businesses like retail, because your gross profit only gets perfect once you do all your accruals. But however, I find like your wages to sales is a very, very important metric. Chloe, do you look at do you have any key metrics in Wheel or in other businesses that you look at?
I mean, we look at obviously things like expansion, churn, like the SaaS type metrics, which doesn't directly feed from these, but like things like CAC, which is like spend percentages for marketing. That's a big one we always look at. Yeah. And like I said, like with these key ones, we look at it at least once every week or fortnight.
Wow.
Yeah.
Wow. So the minimum I'll look at wages, including bonuses and super. I ignore payroll tax because it's not a drivable cost, but I look at wages to sales or gross profit if you're a GP business. And I also look at operating expenses to sales or gross profit if you're more of a GP business. And if I track those, that's when you can tell a profitable business. And I always just do it. It's my 60-20-20 rule. So 60% of my costs are usually wages if you're a people business. 20% is usually your operating expenses, and then 20% is your profit. Anything on top of that, above 20% profit, usually you're doing amazing. So I start to have those numbers in my head. Chloe, what I'm probably hearing from a growing business like yours is your operating expenses are going to be much bigger because you're probably spending more on marketing. Excellent.
Yeah.
Got it. So we'll move to, we've got Patrick looking at efficiency ratios, admin to total expenses, fundraising expense to revenue. Oh, that's really good. That's really good. Now, Patrick, that would be something I would put in day 2. So I would do my month-end reporting and have a look at it. But those metrics and things, they go in my day 2 pack rather than my day 1. It drops a P&L and it's all linked to Excel. Of course it is. Patrick, you should come work for me. So next one we're looking at is revenue there, about, especially for not-for-profits, about kind of receiving funds accurately and resolving issues daily. And what we've found there is a lot of businesses, when they receive money that they're not sure of, they park it into a clearing account or into a prepaid funds account. Now, we've found that most businesses or organizations will have some slush on their balance sheet, especially if you've got a big government grant. So my recommendation is to look at that the day it hits as much as you can. Chloe, I know you're in you'll probably be in funding world and previously been in funding worlds. Have you had any fun with that in your time?
I mean, I like in my audit time, I had a few not-for-profits, and you're absolutely right. Like every time we come in, we'll go through the balance sheet and we'll be like, oh, what's this account? Oh, it's just this. It's almost like this dumping, like we don't know what it is, put it there. And it's been sometimes it's there for like a couple of years and no one knows what it is. I think resolving what it is early is so key, because the longer you leave it, the harder it is to actually know what it is.
Exactly. I came into a business with $530 million business, 570,000 sitting on the balance sheet of overpayments from large government organizations. Government organizations, probably no one on this call, but are notorious for paying bills twice because of the approval process and the systems they're on. And what we found there is by giving one person money in responsibility, it was theirs to handle, that changed the tide. So, yes, if you've got a lot of receipting, that's fine. But one person, that's the person you go to. That's the person that is responsible for all the money in the door, and they know it. And that's their key part of the month-end process. Next one we're looking at there is about payroll. Now, I'm huge on payroll efficiency. And I always try to push businesses to a monthly payroll near the end of the month. It is the most efficient. However, if you've got staff under $70,000, I think it's unfair, because they just usually can't fund that amount of time period. Chloe, what do you see in payroll on your timings, and what do you prefer?
So one of the first things I did when I joined Will was actually change from fortnightly to monthly.
Well done.
Just because it made like reporting and everything so much easier. Like I don't want to accrue for a week, 3 days. Like it's just not worth my time. And actually, everyone actually really liked that, because it aligned to how, because if they've been in previous places who were bigger, paid monthly, and then just how they aligned their expenses and stuff, it just really worked out for them. So we didn't have anyone complaining at all. Everyone actually embraced it.
Excellent. And I always try for that. And Wendy's just made a really good comment there about awards. Wendy, you're absolutely right. Some places, like we've got hospitality clients, and they aren't paying monthly is the play. And I think it's really important to ask your team. It's not fun doing fortnightly. However, Xero matches fortnightly and weekly payroll well, but it doesn't do monthly that well, where Employment Hero and those types of ones do. Narita, it unfortunately doesn't do monthly payroll. However, I do monthly payroll in Xero, but it's just not as efficient. It just messes with the hours because it pays it based on the day. The other, I'm just going to come back to a point there from Narita about working papers and balance sheets. So Narita's made a point there saying, for good, making sure you complete work papers every single month for all balance sheet items makes your month end better. The first thing I did as a CFO coming into any business was I installed my cash flow report, and then I installed my balance sheet report, which I think I developed in KPMG in 2001, and we still use the same template. It's just absolutely efficient for keeping your month end good if there's any slush in there. And Chloe, I know from your side, coming from audit, the balance sheet's where you start effectively, right?
Yeah, and look, I'm a firm believer if your balance sheet is correct, your P&L is correct. Yeah. So it's really important to keep that on top.
Yeah, agreed. Catherine, you've asked a really good question there about paying half in advance, half in arrears. Is sufficient to satisfy the award requirements for fortnightly pay. My sniff test on this, which was about 8 years ago, was a no. However, I would love to see what an employment lawyer thought on that. It would be fantastic. The other one I've already mentioned about payroll is about accruing, payroll estimates. They don't have to be perfect. I used to do my payroll accruals to the 1,000 or the 5,000 number. I barely ever did divisional accruals. I let my divisional reporting just be actuals, and then over the overall business number, that's when I did my payroll accrual. And I did it, if I had a pay run on the 15th of the month, or we do our pay run on the 28th, I just, I would just do those 3 days of that payroll accrual then. And Chloe, that sentence you said before, it's just not worth your time. Like, you can let the system do the work for you now is the play. And that last point there about one person with end-to-end responsibility, in all my times running payroll, and I think I've been running payroll since I was about 25, so almost 2 decades now, is every payroll manager or payroll officer that you're working with is smart enough and capable enough to do the payroll journals for you. So I've always got them to give them access to the system and got them to do the journals and the reversals as well. So, I always look at that payroll person. They know how to do it. So accountants, and they don't have to do everything on that process. It's been my favorite. Anything else on payroll on your side, Chloe, that I've missed?
I think that's a pretty comprehensive summary, I think.
Yep. Excellent. Adriana, if you're still there, I'm going to get you to hit the next slide. Thank you. Patrick, I'm just going to answer your question quickly. Can Xero calculate a long service leave provision based on probability? No system can. I worked at AGL with millions in long service leave provisions, and I still used Excel. So even Employment Hero, doesn't do it. Excel's the way. I use a 1 to 10 method, so it works for sure. Okay, this is our last slide. We're going to talk about how for not-for-profits to speed up their month end specifically. And the first point we've talked about is separating the day 2 reports. Now, the biggest one I've seen is incidents and funding spend. Now, funding spend needs words, needs explanation, needs graphs. It's about projects, and you need to get the numbers and then ask people. So the most important thing that we did with one of our not-for-profits is on that funding spend, we helped them develop the report, but we broke it from the P&L and balance sheet. Chloe, is there anything you've broken out on month end that stays far, far away from that? Obviously, the CAC you were talking about as well. Yeah,
so I think in terms of our typical SaaS metrics, we break that out into a separate dashboard that we report, just because it's not as simple as, these are your balance sheet, these are your P&L accounts. It feeds into it. There's a little bit more to it. So I like to keep them separate.
Yeah, I agree. The service delivery one is really important for our not-for-profit clients as well. We're working with a gym and a swimming club, or it's more of like a club with a gym and a restaurant and those things. The service delivery metrics about, how many members came in the door, how many events did we have for those members? Those things can take me 10 days to find the answer. You're always asking random people around the business, what was this? How did this happen? And breaking those away from a month-end process has just made life so much better for all the financial controllers and CFOs that we've been working with. And honestly, what I've found is a board meeting usually happens about the 15th to the 20th of the month. And so if you deliver your P&L and balance sheet on day 1 or 2, then you've given yourself a bit more time to do your service delivery. Boards typically like data about 5 days before a board meeting. So if you wait for your non-financial data and deliver it with the board pack, then you've effectively broken away the finance function from the material, non-financial part of the business, which has been a really nice, easy change we've put into some places. The next point there is we're using review your budgets or funding metrics pre-month end. Now, almost all P&L and budgets, P&Ls for not-for-profits will have a budget. We were talking to Beth McElwain before, who's the CFO of Windaring, and she used CalcSA for her budgets, and she was reviewing those all the time. Those types of systems about looking at where you're over in expenses and asking the people why has been the biggest way to stop surprises for a financial controller. And especially if you're asking or giving your CEO or, people in charge of budgets information early before the month ends close. Oh, I think we're, 50 grand over in travel, or we're 100 grand over in expenses. You do that before the month end. That's been a huge positive to businesses. Chloe, what do you see, and like, what do you track, or what have you seen on budgets and actuals versus budget reporting? Like, how tight do you hold those, and how do you run it?
I mean, I think it really depends on the type of organization where you're at. Like, for example, before, when I was in like an A6 place, we used Jedox or Hyperion at some stage, where you it's live, right? You just goes in, you see the budget, you see the actuals, and it can be at a project level, and you look at it, you can see exactly where it is. Whereas with Will, how we do it is because we set up the budgets in Will. So pretty much I know on a monthly, this is the budget this team or this project can use. And if they go over, I get a notification straight away. So
you do wheel budgeting, do you do wheel budgeting as well as zero budgeting? Is that
I use it on Will.
Oh, wow.
Yeah, because what I have with that is that I get notified. So then say if I'm really busy, I may not have time to have a look at it. It's almost like I'll get noticed straight away that, oh, this person needs X amount more because they've already gone over.
It's really cool. We're working with a company in the UK called the Reading Agency, and helping them set up their event budgets as well. So they help right through the UK, advance people to read more, especially if they're adults that can't read. They try to get families into the libraries during school holidays so they can read together. They do promotions and all those types of things. And Chloe, same thing, they've set up budgets. And we were thinking about putting that into the finance system, but maybe we actually preempt that and put that into like the system like Wheel, which is I suppose the project management costing.
Yeah, because I guess the beauty of it is that you just get live notifications. So it's not like, oh, they've spent it, it's over, versus, oh, they don't have enough to spend, they will come to you. So it's just changing that around and you get notified straight away. That's what I like about it.
Yeah, well played. The second or third and fourth bullet points we've kind of talked about there, about using simple systems to help you close and report. Like, set up your reports early, like if you're using any system, it could be Great Plains, it could be, NetSuite, it could be Workday, it could be Xero, QuickBooks, or MyOb. Like, get your reports ready is the play. So don't spend time messing around with your month-end reports. And Chloe, you've also mentioned there quite a lot about being 95% accurate on month end. Now, I remember there was a point early on in the system, in the chat, from someone saying, I wish that they couldn't be perfectly accurate each month end. It was Kelly Irvine for a $10 million not-for-profit. No. I think Kelly might have said, I wish that you had $10 million profit. Now that makes perfect sense. Gotcha. But yeah, being able to, thanks, Kelly. Being able to be 95% accurate is the absolute winner. I've always said, explain rather than perfection is the play. Next one there. Do you want to talk through your use of graphs for your month-end reporting, Chloe, and or your non-month-end reporting? What do you do there?
Oh, I love graphs and trend analysis, because I think, especially, we have our detailed Excel and all that, right? That's for us. But when it comes to your management packs, goes up to the execs, no one cares for huge tables, a lot of numbers. They just want your 5 main metrics, your percentage, did you hit budget, where you're at, and then graphs and trends. That's all we use. Like, before you were saying, how big is our month-end pack? We have 2-3 pages, but literally it's like 2 pages of graphs and just like high level, like dashboard type data, and then a page of commentary, like an exec summary, and that's it.
Yeah, absolutely. And I'm just seeing a comment from Narita on there that graphs are great for boards that don't have a lot of financial experience. Absolutely. Now I've been doing budgets on a page, and I'm talking $50 million businesses with a budget on 1 page for 10 to 15 years. And I remember a CEO of the business that I was working, it was a design business. And he goes, mate, I've been working in listed, small and large businesses for, 30 years. And he goes, it's my favorite budget because it was a graph on the top and it was a bar chart with revenue, expenses, profit. And it had a small section of numbers, and then it had detailed P&Ls down the bottom. And every single person in that board could look at that, and that's all they ever looked at for the budget was the play. Nick, can you see an example? Oh, I reckon I've probably got one. I might need to cleanse it a bit. Welcome to connect with me on LinkedIn, and I'll send you an email with it. But Chloe, on the graph side as well, I really pick about the graph that I'm using. For relationships, I always use pie charts and try, especially for expenses to wages, expenses to gross profit, and then profit to profit to sales. I always use pie charts. Yeah. I love a line chart when I'm looking at trends over a long period of time, year after year after year. And then I love bar charts for comparable data. So, Chloe, if you and I were both partners in the bean counters and we were, running projects together, I'd have your projects versus my projects and, how much revenue we've kind of created and also probably how much profit. So I use those bar charts with Chloe, you'll probably know the name, when they've got different colors stacked in them on the bar charts, different.
Yeah, I think I know what you're talking about. Yeah. One thing that I do like using is waterfall charts when I look at actuals to budget, especially the gap, showing the gap to, say, for example, actuals to Q3, and then you've got what you have in the budget and then where you will be, say, end of year, where you're expected to be. I think that's a really clear and easy way to show like the steps to where you're going to get there.
Yeah, I agree. How complex is it for you to make a waterfall chart? Like, how fast are you at that?
Once I've set it up, it's really just adopt the data and it will refresh. But I use Excel.
Yeah, I've never been fast enough at it. But if anyone wants to have a look at any of our budget on a page, I've also got a cash flow report that I've been using for 9 years now. It's like a daily cash flow report. It used to work for a $10 billion entity business, and we've put it into $1 million businesses and $50 million businesses, or our month-end balance sheets. Very welcome to send me an email anytime. I'm happy to share those. They're not the most fancy things, but they work like crazy. And then our last point there is about reviewing what data is best shown daily, weekly, or monthly. And Chloe, you did this really well. Now, I go daily is always sales and collections every single time as a minimum. And then I also add on top of that, once I've got those two, I add debtors in daily. Is there anything you track daily, Chloe?
We have dashboards for sales and marketing daily because that's like a big focus for us. And cash, we look at that.
Oh yeah, cash I look at as well. Yeah. And then weekly, if I'm looking at team reporting, I often look at that. But then monthly is, I suppose, everything.
Some of everything, yeah.
Exactly. Adriana, I think that's our tips. If there's any questions from anyone, we are also very happy to answer.
The top tips. Yes, guys, if you have any more questions, we'll be online for another minute or so. As I said in the prior session, I'm going to make an effort to get as many discounts from a lot of the tech companies that you guys have spoken about. But if you weren't on the prior session, I have been able to confirm with our CFO that we'll have a special discount for you, as well as a special, like a 1 month extra for free. So we'll just kick off a poll. If you would like some more information, just click yes. Or perhaps, not right now is also acceptable. So next up, we are exploring financial controls in an AI-enabled world. So I know that there were questions based in the previous one about using ChatGPT for your grant application. So this one will be looking at other ways that you can be using AI. Nerida, you're absolutely right. Many tech programs do offer an NFP discount, so always ask for that as well. I was trying to get a little bit extra, trying to use hopefully my powers of persuasion and get a little bit extra, but absolutely always ask for the NFP discount. All right, guys, thank you so much. I'll see you all in about 13 minutes. Tyler, Chloe, very much appreciate your time. Chloe, I'll let you, go get a little lozenge.
Thank you.
Oh, you've been sick, so appreciate your work.
Thanks, everyone. Appreciate it.
Thank you. Bye.
Bye.